Well, downturn in the Chinese markets produced wild swings in the rest of the world this week. As the West seems to rebound, questions remain in China over the health of the economy. Ayman Sikseck gives us a look at how this crisis compares to others in the past.
It's been a tough week for the Chinese economy, with $5 trillion lost and investors fleeing for safety. The slump in China's markets has so far wiped out wealth equivalent to the economic output of Germany and Italy combined. The Shanghai Composite Index has lost 23% over the past 5 days, the steepest decline in nearly a decade. Concerns in Europe are already referencing infamous crises from the past.
China must stabilize. The Chinese don't know that yet. They have not had a crisis as big as the one we have with .com. It is something they have to get through.
But how bad is the crash in China compared to previous financial crises which affected the U.S. economy? The 43% decline caused by the China fallout seems modest compared to the 78% decline caused by the dot-com bubble in 2000, and almost manageable when compared to the 84% slump which followed the 1998 Russian default. For U.S. nationals in China, the recent crash is worrisome, but not enough to panic.
There was basically only one strategy in the market, and that strategy was to ride the government-supported bubble. And when there's only one strategy among investors, then the market becomes incredibly difficult to predict and incredibly volatile.
U.S. markets know about volatility all too well. In 2008, 158 years of financial history came to an end when American investment bank Lehman Brothers filed for bankruptcy. The company, which until then was rated the fourth largest investment bank in the country, lost the possibility of a rescue package. All eyes were on the once powerful and savvy Lehman employees as cameras rolled when they cleared out their desks. Having witnessed the Lehman Brothers crash, financial analysts feel secure enough to determine that this time around, it will not be the U.S. that suffers the consequences the most.
This is very much a cyclical thing. I mean, we had exactly the same thing happen 7 years ago. First, before it would have been the states that started to slow down, and then that would have caused the rest of the world to slow down. That's not happening now. Now China is slowing down.
So is the U.S. in the clear? A sharp rise on Wall Street this week seems to suggest it is. But as White House Secretary Josh Earnest points out, what went around could come back around, especially due to the interconnected nature of global economy.
There's no doubt that the global economy is more interconnected than it's ever been. And there are a variety of reasons for that. Technology is not the least of them. But what I would encourage people to evaluate is the ongoing strength and resilience of the U.S. economy.
The Shanghai Composite's history since trading began in 1990 has been marked by extreme swings, but its ailing stocks have now become contagious, bringing down numbers across Asia. Meaning that if the U.S. economy has lost anything during the recent crisis, it's likely lost faith in the Chinese economy.
And we're joined in the studio by our correspondent, Ayman Sikseck. Ayman, thanks for that report.
Thanks, David.
As we're trying to decipher, I mean, everyone has been scrambling to decipher or understand what's taking place with the markets this week. Obviously, we're not the only ones who are struggling to grasp at this a little bit. You're doing a nice job here comparing this to past crises a little bit. But 2008, I mean, that's the big one. That was the big crash recently, at least. Is there a comparison? I mean, just to put the question to you again.
Well, it is true that it's hard to wrap your mind around everything that's going on, but we're going to try. It is the main fear that this is another 2008. This is exactly what everyone is talking about right now. However, it seems more than likely that it's not. In 2008, the crisis originated in the U.S. housing sector, which of course put the banks in danger because they were way overexposed to the housing sector. This crisis, however, is in the Chinese stock exchange, which is not nearly as exposed as the U.S. institutions were in 2008. So it's very unlikely that this will deteriorate in the same way that we saw in 2008. China does have a lot of stock and wealth in its housing market, and for a while there were fears that we're going to see another Freddie Mac and Fannie Mae like we saw in 2008. However, now we know this is not going to happen. We're already seeing Wall Street rebounding, several markets in Germany and across Asia rebounding a little. China is still doing pretty badly, but doesn't look like we're heading back 7 years so far.
This may surprise some people who follow the situation because China has a lot more government control over their markets than, say, the U.S. And we saw the government try to intervene here, buying up billions of dollars worth of shares. The government trying to intervene here, but seemingly unsuccessfully. Where's the failure here? What's the Chinese government? How do they fit in?
Well, they are trying in several different directions because it's also a question of should they interfere. And of course, you remember this was the question for the U.S. too in 2008. Should they bail out Freddie Mac and Fannie Mae or not? But what they are doing is devaluing the yuan in order to help the interest rates. So far, as you said, it's not really helping. However, something needs to be done by the government because a lot of emerging markets like Brazil and Russia, they depend on the powerhouse, the production powerhouse that's China, to keep buying their commodities. And China now, because of the crisis, is not buying any of these commodities anymore or buying a lot less, which really puts these countries at risk. They're not so emerging all of a sudden. And we have to take in, of course, the lowering oil prices all over the world. And these are also countries which their debts to the states are denominated in dollars, and the dollar is strong right now. So big questions arising from this crisis.
Ayman Sikseck, thank you very much for helping us again, as I put it, decipher, understand, whatever, take a look at the markets around the world as they've swung all over the place this week.
I feel I've left you with more answers than questions, but we did our best to understand.
Either way, that's the economy, I think. So again, thank you very much.
Thanks, David.